Ding, ding. Welcome to Neeker's Bullpen. I'm Nick. Let's get started on the SPY today because I'm telling you, this thing's already getting nutty. Here we go. Right now, you're looking at the 1 hour chart. Now, I had a thesis set up from yesterday that stated that if we can get to 383, 393, right? Give me a second here. If we can get to 393.67, we can get an upside back to 398. And of course we did. We even see the drop off from 398 all the way back down to 393. So you had two opportunities to grab what you wanted. Okay, this gave us a hangman on the daily chart. Gave us a hangman um, candle. So that being said, that typically means we may be looking for a downside because we are at the top of a trend, right? We are at the very top of the downside of a trend that we've been kind of dealing with all year last year. And for people to think that we're going to keep going up, up, and up, and up, it's kind of ridiculous. Why? Because of the fact that if it was going to keep going up, it wouldn't have rejected here, okay? Now, there is a such thing as it can bounce down, bounce back up, and break through, right? There is that big significance there. It can do that, but as you see here, that's not what happened. Um, we kind of cleared up. Sorry for all the lines here. I moved to default to get rid of it, but it's kind of doing it right now. Let's see, move over here, see if that works. Crap. All right, love live, huh? So anyway, um, so you see the candle pattern here. I know it looks a little jumbled up, but when you're zoomed in, it's a lot more far apart than what it looks right now. Um, so anyway, if you notice that how we kind of just little move here, right, on the daily chart, then we kind of got this hangman here. So, and the fact that we get on this ascending line, trend line here, right, we rejected right there on top of it. This ascending trend line has been here. I have drawn it for a good while now. It's now, it goes back to May 20th of last year. All right. So this is a very significant line. This means that this trend line is based on the fact that the price keeps going up and down at certain levels. And when you draw this trend line, you see where it starts to go up and where it starts to go down, right? Where it rejects and where it bounces. That's what this trend line indicates. And this goes from May 20th all the way to now, giving us this candle. So if we can't get over this trend line, we definitely ain't making it up to here, which is the macro line of it all. All right. So let me jump back out here. See, this is the high of last year, of actually the year before, 380, 392.88. Or I'm sorry, this is the second heel, 390, 397.98, right? And let's see, let's back up a little bit because it's kind of hard to see that because, like I said, we felt. There we are. I gotta reorganize these. So there we go. Again, I apologize for all those lines. 370. There it is. 379.98. This is the top of the previous year, right? Where we got up here, then we crossed in to the new year of 2022, and then she just dropped ever since. Been dropping all year long, and a lot of people thought that, oh, we're not going to be. This is going to last maybe a couple months, 3 months, right? Especially when we got to here about. This is about 3 months in. They're all saying, hey, we're going back up, right? You heard it. And then, of course, we just kept falling down. Somebody asked me, where are we going? And I told them flat out, we're going to 350 or lower. That's exactly what I said. We're going to 350 or lower. And sure enough, we got to 350 or lower. As a matter of fact, we got to 348.11. So just kind of recapping throughout the last year here so you can understand what happens today. Okay? So understanding history will get you to understand better idea of what may happen today. So we have several taps on this line, okay? Even with CPI right here, this big move right here is CPI. All right, let's go ahead and just do this right here. There we go. This move right here is CPI, where she gapped all the way up and just gave it all back the next day, right? And then the day after that, just gave it all back, and then she just kept dropping. All right. So I'm kind of seeing the same setup here, just not breaking over first and then coming back down. Now, if you check out my thesis that I set up, I stated that if the catalyst is big, the funny part is I didn't even realize CPI was even coming out that day. I said if the catalyst is big enough, it can get to 410. Sure enough, it did. It got to 414 actually in pre-market and opened up right here at 410, came down, retapped, and she dropped. Me and a lot of my guys right here in our community, because we've had the thesis already set up before the even pre-market blast took off, right? You can actually see my thesis. It shows that I called that blast off before it even happened. All right, I actually have charts that show that I call them out before it happens. You don't get this crap that you see, where is it? Oh, we called this. And all you see is the chart already made the move, right? You notice that? They already made the move. Like, oh, we called this from here to here. We banking. You keep telling yourself that. Something tells me if I don't see a chart that says this and this and this before the move happened, you blowing smoke up somebody's butt and you confusing somebody's proctologist. I'm telling you. Because right now, I call that all lies. All right. This is how I see it. If you can't show me a chart that has a thesis like we do before the move happens and then when the move happens and then the thesis follows, right, what the chart is doing after the fact, then you got something going on. And that's what we do here. I set up a thesis first thing in the morning and we see how it plays out. So far, I think I've hit, I'm going to be generous, 9 out of 10 times. I want to say 10 out of 10, but I don't want to be caught. But I believe it is like 9 out of 10 times my thesis has hit. Why? Because I do nothing but study price action. Okay? Watching the average price, every once in a while you get these big moves. Okay? And based on price action and SPY's love of patterns, I'm able to figure out an idea of where she's going. Now, the thesis may not play out in its exact entirety, but it does hit my levels that allows me to take moves. Like, let me show you something real quick. Let me switch over to my 6 charts. All right. Like over here, this is the 5-minute chart right here on the top right. Okay. This over here is today's thesis. What you see to the right, right? That's today's thesis. So anyway, so right here on this, at the bottom here, I don't believe any of us caught this here, and I'm not going to say we did. But I do know that we did. A lot of us did get in around here about 393.67 and was able to ride it up. Now I don't believe everybody caught this whole thing because of how far she pulled back. Okay, and then went all the way back up to 398. But I do know I did have a couple of guys that actually caught this open on the drop because that's what I called out. I called out. So you want to put your entry up right here at the 200 SMA and then catch the drop down, but make sure you have a tight stop loss. Same thing, once it gets down to here, let her bypass. If she's going to bypass, look for a good buy setup and take her up from here. So far, she did exactly that, right? As a matter of fact, I believe in my previous video, it states that as well. Okay, if it can stay above the 200 SMA, we can get up to 398. If it rejects the 398, we'll drop down to 393.67. So, of course, it did in the pre-market. She fell, got to 393.67, and wham! Jibber jabber right here, chopped up right here in the 20 and 50 SMA, and just ripped back up to the 398. Would not get under the 200 SMA as we see right here. Okay, so now pre-market she dips down. I'm sorry, this is post-market. Post-market she dips down, comes back up in pre-market today, jibbers, and she finally breaks down right here, 396.86, all the way down to 393.67. This is where my thesis comes into play. Okay, so the thesis states, all right, the thesis states, let's do this. This. Didn't think this through apparently. All right, so the thesis says this. You may have to zoom in, huh? So if the SPY could not get over the ascending trend line that worked as support and resistance, this indicates the top of the move. Now, the first things first is this right here. The top of the move is this descending line of resistance is this right here. That's what oh, sorry, the ascending line of resistance. This is right here. All right, this line right there. All right. So there we go. Got highlighted for you. Okay. So this is the one we're talking about. It couldn't get over here. All right. Now, the remaining of the thesis states. Give me one second. Try and do all this correctly here for you. So the rest of the thesis states that let's zoom in. Let's get a better look, and let's drop. Let's really dissect this real quick. How about that, huh? So you guys can see what I see. All right. Let's see. I'm not liking that. It's too much. Too much, right? All right. So there we go. That's a lot better, isn't it? So here we are. This is the ascending line that we're talking about, right? It couldn't get over. So now we broke down. Here's this part of it. The SPY also passed the lower ascending trend lines that merged together and dropped to the 393.67. All right, these are the ones that merged together right here. Okay, and then of course right here they start splitting apart. Right at the 50, she drops to 393.67. So, all right, make sure we're on the same page here. So, all right. Now what happens after this? Well, according to the thesis, it states if the SPY can hold above this level, the price could climb back up and retest the upper trend levels, meaning it can get back up to here. If it can get back above or stay above 393.67, you can get from here back up to here for a retest, where this green trend line is currently, and this 50 SMA. You're looking for a retest here. Okay. However, if the SPY cannot stay above this level, the SPY will drop to 392.50. That's basically roughly around about right here. All right, that's why. You see the bottom of this candle, right? The bottom of this green candle right here is why I said 392.50. Look over here, right? We had some chopping up the day before that, right? On the 11th, doing the same thing. Nobody's got over 392.50 until was at 11 o'clock. Then she finally broke out. All right, so this is why that level is very significant. So again, and then if it can break under 392.50, because I don't see this as a actual support level. This is a reaction level, like I talked about before. There's a difference between a resistance and a support level. This is well, of course we know that, but there's a difference between a reaction level, a simple price level, than a support level. Okay, support level has strength to hold the price up, right, for an amount of time. A price, not a price level, a price level is when a price will react to it, will bounce up, chop up, cause an S curve right there in that area, then drop. If you don't know an S curve, I'll talk more about it later, and then maybe in another video explain what an S curve is. But basically, it's an S curve. It comes down, pulls back a little bit, right? This is a wonky version of it, but this is an S curve. Comes up, pulls down, pulls back. This is an S curve. All right. There's a lot more better than that. Over here is a little bit better. This is an S curve. Okay. But anyway, so that's what I'm looking for here. I'm looking for an S curve here to slam into 390.48, right here near the 200 SMA, roughly around 390.74. So this is what I'm looking for the day. So far, she looks like, and we're watching this live right now. We less than 30 minutes to the market. You're seeing now she's already starting to come to fruition, and we already had this written out, right? It's kind of nice, isn't it? You're seeing my thesis already written out right here before she even moves. So anyway, if the SPY gets to this descending the trend line of 398.55, right here, this is the descending line. This is the descending line we're referring to at this moment, right? If we cannot hold above 390.48, this is the line we're talking about. The SPY will need to hold above this level to get a solid bounce. All right. So if we can bounce off here, and get back up, we can get back up to, we can start moving our way back up again. Now, I've seen these big moves down here where they'll hit one of these two levels and they'll pull back hard. All right. So kind of keep in mind on that. That doesn't mean she's going to. Watch the price levels. All right. Typically, when something goes parabolic, if you will, this ain't really parabolic yet. She's just kind of really just dropping down. She typically has a move back upward. But if you watch the SPY enough, you'll notice she doesn't always pull back. She'll just drop all day long, all right, and barely have maybe have a quarter of a pullback near end of day. So kind of keep that in mind, and don't try to catch on the falling knife. If anything, wait for it to hit a level, a significant level where a price level is, and then take it for another ride downward. That would be better off in your interest. So let's go. What's what happens after 390.48? 390.48. If the SPY hits that descending line of 389, that's right here, 389.50, the SPY will need to hold a solid balance. Yeah, we already talked about that. If the SPY don't hold above this level, then the price will start hitting lower levels. All right, now we have to zoom out for this. So you can see what I'm talking about. Let's right here, so we can get more of those little lower levels. Those lower levels. Here's that level right there we're referring to. Right, this ascending line. Where's it at? Sorry, I lost it. There it is. There it is. There's that descending line right there. This descending line backs all the way up to January of this year. Sorry, January of last year, January 14th of last year, to now, giving us why this is a significant reason why she should bounce here. But if she don't, then it's 388.52. If it gets to 388.52, let's see. Yeah, here it is. Yeah, if it gets to 388.52 and it doesn't hold at 388.52, the next, right, it's going to be down here. I'll tell you what, let's do this. Forgive the, if y'all can hear that, please forgive me. The landscape folks outside my place decided to go to work today. Yay! Let's see. There we are, 388.50. Here we are, 388.52. If it cannot hold above here, right, then we're going to get around this level. Now these two, you see how they cross right here, right? They crossed over yesterday. Now here we are today, where they kind of split apart. This is going to be a good this is going to be a significant support level around 388.52, 387.62. Now, if the price breaks under here, we're going down. Okay, we're going down. Excuse me, we're going down hard. All right. So right now, my indication is that if the SPY has enough selling power, basically, she can get down to here, 388.52, 387.62, and you might actually see a nice bounce from here back up to 390.48 if she does, in fact, pull that far down. But for now, the point of the thesis is not trying to catch the whole entire move. The point of the thesis is to catch the meat of the move. So in order to catch the meat of the move, this is what we do. We're now under 393.67. So here in about 22 minutes, the bell is going to be coming out, and I'm expecting this to kind of pull back, maybe even just keep jerking all the way down, and then pull back off of the 200 SMA around 396.74. All right. When she already has this kind of a drop, it's got people scared, meaning it's going to drop even further. She's going to really pull down. So let's take a look at the 1 minute chart real quick and see. All right, so here's the rejection right here, 393.67. We're bouncing right here, here. So see how we're rejecting right here on the 50, right? So if you want an entry, okay, you want this to kind of spike up above, okay, this 393.36 area, right, where this 50 is. You want to spike above, throw your sell order right up under it, and then catch the drop down. If you want to be a little bit more conservative, and I have nothing wrong with being conservative, I like conservative, then put your entry down here around 392.99. Now, you're not going to catch a big part of the move, but you're going to catch a nice chunk of it, right? Because remember, 392.50 is going to be a reaction level. So do not go sizing in, right? Don't go dropping a whole port or, 8,000 shares or 2,000 shares, whatever it is y'all do, um, around here because you're only 40 cents away from 392.50. All right, so we want to make sure we're clear of that. You want to make sure you don't get that hit that hard. So once you get 392.50, then you'll see some reaction. Then once she breaks back under, once she retaps up here or just falls through, then you're good. But don't try to catch this whole thing with a big port because again, if she pulls back off from here on the open, you're going to get burnt. And if you are a professional trader, you're going to have a stop loss, and your stop loss is going to tag you out before the move can even happen. So be patient. Give her about a few minutes before you take a position. I promise it's worth it. All right, I really do. I promise it's worth it. Only traders who've been doing this for over a couple of years can catch these moves that they open. A lot of them don't even do that because they know the better moves is after the fact. Let the whippiness and all the craziness go away first, then get back to regular price action, then take the order. All right, so kind of keep that in mind. So that's the thesis so far. That's what we're going with. So you can follow along with us and see how it plays out for yourself. But that's how we're going to do it. I'm waiting for the pullback to maybe 394.02, 393.67, somewhere around this area for the further drop down. That's what I'm looking for. And if I get that, I'm going to go ahead and put a sell order in and break down. Now, if she can get over 394.02, then I'll be waiting for a bounce off of that for a push to a higher most. Also looking for a good entry point to get me in to get in. A good entry point, I'm going to use this one as a great example over here because we did this one yesterday. So right here, you see how she capped back above the 200 SMA? That was my call. Make sure you get in under this candle right here, this wide wave candle, right? You want to be in here. That's what I called it. And then, of course, that's under the 200 SMA, and bam, she drops, and here's the reaction, right? So, of course, because it went from here, 396.29 all the way to here, which is 395.24. That's almost a dollar move. So I got everybody to put their stops under this one right here, right? Under this one right here. So once we got to here, right? Once we hit this line here, start reacting to this line here, I had everybody put their stops here, right? Somewhere off this tail. And by doing so, I don't think anybody got tagged out, if I'm not mistaken. But a lot of them was able to catch this whole thing. All right, because of the fact that she dropped down, and they just kept dropping their stop losses. Every time she dropped, they dropped their stop losses. So I think they got out. If they trade like I expect them to, they probably got out about roughly around here somewhere. Probably that one's probably where they got tagged out at. Okay, and then you see it coming down. If you want to try to take the move upward, right? Then of course right here, you'll be able. This candle right here is where you want to watch out for because this one's red. So you put your entry here, right? So voila, you got your entry here. You got another touch here, and she just slowly but surely, right? Let's go take a look over here. She's just kind of dragging that line. You know what I was talking about before about how she chopped up, right? She stayed at the 200 SMA, and I told them as long as it stays at the 200 SMA and starts getting closer up into it, she'll blast off. And sure enough, voila, look at it. She starts moving upward. All right. Now this one took a lot longer than I'd have liked, but the thesis still played out. Okay, and I said that before yesterday. I said this taking a lot longer than I like because I have a time frame in how I like my plays to play out. This one wanted to drag out all day long. Okay, it really felt like it was all day long. So anyway, that's how that played out. So we're doing the same thing yesterday, kind of like what we did today. Like we're going to plan on doing today. Here we go. See how she's kind of bouncing around right here? I like to see her come back up, retap here, 393.97, right? Basically where the 200 SMA is, wherever she lands by the time open hits, and then take the rod down and cut for her to drop even further. But again, if she breaks above, make sure you wait for these and this to converge before the pop up. You get a better move. I promise you that. You'll get a better move if you wait for these to cross each other before taking a position. This will help you work on your patience as well. So that is it for now. I hope you enjoyed this. Got to cut this short because I got less about 15 minutes before uh, my classes start, because I'm teaching all of this live while the market is going. So if you like what you see, you want to learn more, hit us up. Come join us on our Discord. I promise you, you won't be disappointed. What I'm showing you today is what I teach live, giving out real live call outs where you might want to look to take a position or look watching where the SPY may or may not move, right? Because right now we are focused on the SPY because the SPY is a little bit easier to teach as far as price action because it gives you several different environments that allows you to learn from, okay? And if you can learn from several different environments, be able to learn how to buy and learn how to sell, learn when to wait, learn when to go. And when you're able to do all this in the SPY does have different environments, different types of price action. You kind of get used to it. When you get used to it, you find yourself getting more adaptive. And then, of course, once we get used to it, guess what? What? We pick another ticker, do it all over again. This builds market strength, okay, in yourself, and basically market understanding, if you will. Being able to understand this better because right now, as most people still believe, we're in a bear market. I'm sorry to tell you, we're not in a bear market. We've never been in a bear market since this mess started. Go back and look at it. Pull up your 50%, pull up your Fibonacci's. Go from the COVID low to the market's high, and you will see yourself. Map it out yourself. This was a 50% retracement. This is a healthy retracement, folks. All right. When you get a 50% retracement, that's usually a bullish sentiment, meaning that eventually, once we break out of this downtrend channel, right, the four falling peaks that we have now, we can start seeing higher highs. But we got to break above the four peak channel first. Until then, we're kind of doing a wedge thing, okay, where we're staying above the trend line from COVID's lows to 348.11 to now, and we're staying under the falling peaks. So we're kind of wedging on a bigger scale. That means we have not fell into a bear market. When we fall into a bear market is when we actually drop under the ascending line of support for the higher time frame. Then and only then will we actually officially be in a bear market. This is not a bear market. All this is, in my opinion, is just scare tactics to scare people to jump themselves out of the money or worse, right? A lot of people that bought into this during the bull run, and they don't understand a downtrend on a market size level. So a lot of people are getting burnt because most of these traders now, since this new within a decade, has no idea how to trade this type of environment. Though we're not in a bear market, we're definitely not in a bull trend. Understand? So that being said, people that this decade, that's why they're probably thinking it's a bear market because they've never seen this kind of a pullback before. But when you pull back to a bigger time frame, you'll realize, oh, duh, we're not in a bear market. We're just in a pullback. Crap. I know how to handle this. At least I hope you do. But if you don't, you better be learning because we're going to have days like this. It's going to happen. And we're still going to be in days like this for a while. Okay? I predicted this already. We're going to be seeing this kind of a mess for a year and a half, maybe a year and a year and 3/4, right? Almost 2 years is what I think. That's what I predicted for it to be. So that's kind of the time frame I'm looking at that we're going to be dealing with all this. We already completed a whole year. We're already in the first quarter. So I'm looking for another 2 quarters for this crap to keep going on before the market makes a decision. Are we going to start pulling backwards or are we going to start moving forward? So keep a clear head, stay objective. And that being said, I think that is it. If you like it, like I said before, if you like what you saw, you want to hear more, you want to learn more, please come join us. We have a Discord, we have Twitter, we have TikTok, we have all this kind of fun jazz. All right, I'm trying to teach everybody, get everybody up to par. My name is Nick. This